all of the big Silicon Valley unicorn founders, all of the tools that we use today, Facebook, Uber, whatever, and they go, oh, I have to get venture capital. And then there's also separately the small and medium-sized enterprise businesses that don't necessarily know the funding landscape and can't know. And sometimes they also go, oh, all of these people are using low-level technology or something poor, and then they're going and getting all of this funding. Large part of my job is going and telling a lot of these people, probably not. It's probably better for you to find capital that is suitable for your kind of business, enable you to build those relationships with investors and financiers. And also just, you don't need to go all the way up to the top.
All right, today we are going to talk about SMEs, startups, and funding. And I have a perfect guest for this, Tim Alvner. Tim, can you tell us how would you like to be introduced?
Thanks, Christian. A lot pleasure to be here.
Pleasure.
Effectively, I'm a finance advisor for small and medium enterprises. I basically help business owners and entrepreneurs translate what their banks or other investors tell them.
All right. So, do founders and owners know what kind of financing they need? So let's focus on this question. Do they really know what kind of financing they need? And if not, why?
So I think this question basically goes down to different paths. You have the founders and the people that have looked up to all of the big Silicon Valley unicorn founders, all of the tools that we use today, Facebook, Uber, whatever, and they go, oh, I have to get venture capital. So they create an idea and start talking to venture capital people. And then there's also separately the small and medium-sized enterprise businesses that don't necessarily know the funding landscape and can't know. And sometimes they also go, oh, all of these people are using low-level technology or something poor, and then they're going and getting all of this funding. I also need to go and chase after venture capitalists. Large part of my job is going and telling a lot of these people, probably not. It's probably better for you to find capital that is suitable for your kind of business, looking more carefully at your business model and what kind of investor is a suitable investor for you, and therefore making everyone that is involved happy.
The noise I've heard on the market most of the time for startup and SMEs is that VCs are too demanding, and usually they are looking for very large amount to be borrowed, to be injected, right? And not everybody is ready for that.
Yes, completely true. And I think that in the good times, a lot of venture capitalists will ask you to take more money than you need so that they can get a bigger share of the company you have. And in bad times, they're asking you to not grow your company, but instead convert the company into something that pays them a steady paycheck, or that there are a lot of clauses that I've seen, for example, where even venture capital firms have consulting charges to the startups that they invest in, so that they make some of that money back that way. And because of the way that a lot of these venture capital firms are structured and their own requirements, given the risk profile they're investing in, they need the people that win to win big.
All right, but are they better VCs than others?
I think that there are different kinds of investors, and then it's just about how good of a fit are you. If you want to go super big with the craziest idea in the world, speak to SoftBank and they might write you $1 billion check. But if you perhaps are working on something that would require a large loan, big physical piece of infrastructure or factory, then you're probably not going to scale up your production fast enough. Then speaking to a bank or industry experts is a better fit. So it's not good or bad company, it's good or bad fit.
Good or bad fit. Now, what can you tell us about banks? Because usually we would say, all right, if I need money, I turn to my banker. Why? What would you say about this?
Whenever you talk to your banker, they probably don't want to talk to you because
Why that?
if you're coming and asking them for money, most likely you're not getting the money from some other place. So then your business probably is having a little bit of a different challenge. I've seen a lot of small, medium-sized enterprises calling up their bank when they're having a lot of trouble. Their revenue has gone down. They don't know necessarily because their clients are asking for extensions, and otherwise those clients might not be able to pay. And then
when there is a kind of cash flow squeeze, right?
Exactly, that's very, very common, right? All of the businesses might be sensible, but somewhere along the chain, one of the companies has a cash flow problem, and they're trying to push it down. And
right.
That's reasonably when you go and speak to your bank. But if you don't have a big book of business with the bank already, and they've already know that there's a book of business to lose,
right?
Then they might just say, well, you haven't used any of our products in the past, you haven't really built a relationship with us, and now you're coming in and you're facing a bit of a squeeze. We don't know who you are, and this money might just be lost. So what's our incentive to give you the loan?
That's right. I heard also, and this was with a previous conversation with you, that sometimes banks do not have the manpower to handle a long list, the cases of a long list of SMEs. Is that true?
Yes. So I think that some of the corporate banking relationship managers that I've interacted with, they can have lists of 200 to 300 small, medium-sized business clients. And now we're talking clients that are running 20, 30, 40 million Hong Kong dollars a year in revenue. But yeah, you're talking about stores down the street, like walk around the street and you'll find 10, 20 of these pretty much immediately. And yeah, they are, if you're then breaking down how much time the bank can spend on those people, it's not a lot of time. If you want to meet your banker once a quarter and all of the 300 people are doing that, there's about 160 working hours in a month. Now all of a sudden you might get 2 hours total allocated, including all the back office work, including all of the other things that need to be done for a small business.
Sure. So let's ask the crucial question, what to do? Well, I have, let's take a clear example. I have my SME who have been running this business for 5 years. Suddenly we see there is a downturn in the market and the cash flow starts suffering. What can I do?
So I think the first thing is that at that point it's already kind of late. Finance, as some people have said before, is effectively a game of exchanging trust for money.
Right.
And building that trust over a period of time, looking at what you have available and what you don't have available, how you actually build your business, not necessarily only with your suppliers and clients, but also all of your other broader stakeholders will broadly help. But of course, if you're having you're forecasting that you're going to have a bit of a struggle, then looking at what resources do you have, what kind of programs are available. I know that a lot of the banks are not necessarily the best at communicating that, but have a chat with your bank relationship manager, understand kind of where they can help you, and see how your business is structured. Sometimes you work with companies that have large inventory and also have large purchase orders, but they still just need to process that inventory, or they might have other evidence of the business that they're doing that might give a financier a lot more confidence, or in that translation, reason to trust them.
Right. So basically, the first thing we should put our eyes on is from very early on keeping a close relationship with one's bank, right? With a bank relationship manager, with a person in charge of the corporate business. Not wait too long to establish that connection. Is that right?
Yes, the worst time to write insurance is when your house is on fire, right?
That's a good way to put it. All right. Besides, so we have talked about a bit about the VCs, the banks. What else can you suggest as a source of funding for SMEs and startups?
So I think a lot of people have had a problem with their overall supply chain. Effectively, that there is a lot of money to source from your supply chain, your products moving back and forth.
Right.
So if you're a physical business that has an inventory, or you have actual goods deliveries, then working more with your bank on this to understand more carefully what kind of solutions they have. This is definitely something that Hong Kong is working on right now in terms of supply chain finance. There are a couple of projects ongoing, actually, to
supply chain finance.
Exactly. So if you're more interested in that, if you're a startup, I think that a lot of the best startup founders very, very deeply know their market. Right. So if you're targeting a scalable startup, that effectively normally means that you're dealing with a service, or that you're working on like massive improvements for some kind of client segment.
Right.
Go out and do a bit of consulting. I know that I'm a former consultant myself, so a lot of people just had a chuckle. But realistically, if you can go out and get paid to solve your clients' problems and understand them better, go and do that.
If the company does not have a stock, what else can this company do?
So I think it comes down a lot to who you're working with and the kind of network that you've built up. Again, building that level of trust. If you're speaking to a particular industry, and then getting people that are really interested in that, looking for industry executives, people that have large companies in that space that might be willing to do more client work with you, or potentially pay a bit upfront. I think that's a very healthy way of building financing for something that is like in that space, or even again like proof of concepts, getting a small contract in, very similar. But yeah, if you're also there are a few various different things depending on where you're at in the world, right? And what kind of business you're working. There tends to be a lot of funding for startups. A lot of places want to be known as entrepreneurial centers. So dig around a little bit in the various government or city subsidies and programs that they might have that are relevant for you. Same thing, like dig a little bit in the relevant pieces of the bank programs that you're speaking to, where the bank might be willing to help you on something. One recent example I have is a company that is small, growing. They have actually an interesting stock of projects coming down the pipe. And then I saw that the bank had sent them a standard small, medium-sized enterprise loan. Oh, hey, like you're doing this. And I looked at it and I realized, hey, the bank has a project for this exact kind of businesses to take additional financing. Why don't we call a different bank department? Again, the relationship manager didn't have the time to look at that, and they were instead thinking, hey, you're a small, medium-sized enterprise, you qualify for this. But the funding arrangement would have been a lot better at a different program that the company would qualify for.
I understand. So the next question I would like to see with you is, does small businesses need a CFO? And we understand the charges that could be involved with that in terms of salary, in terms of appropriate treatment. What can you tell us about that?
A lot of the time, a small, medium-sized enterprise doesn't necessarily have that level of complexity that you would normally look for a CFO or
it's a matter of complexity, of course.
Exactly. So effectively, every business has an accountant. Every business of any size effectively has people going in and doing the audits and helping them on the past, so to speak. But then there are a lot of people, you don't need to go to high finance or for like the trading desks of Goldman Sachs or whatever else looks impressive to find people that can help you read through terms on what the bank is sending you, or to read through the bank's promotion materials, or to help you understand the general capital markets. There's quite a few people that, if they thought a little bit wider about their skill set, would be a strong complement to a lot of SMEs and startups. And I think I'm probably a C-grade consultant and an F-grade founder, and I still see myself being able to help a decent number of people.
Sure. So it's conceivable for a young company or even an established SME to have a CFO consultant they could call on when necessary. Keep always a very regular connection and communication. That's obvious. But we could say a kind of part-time CFO, right? Basically, it boils down to that.
Yes, there's a small trend almost of people going and calling themselves fractional chief whatever, right? So you can have marketing. Yeah, so you can have like fractional chief marketing officer, fractional chief financial officer. Yes, there's a small trend of that because a lot of small, medium-sized enterprises don't need a whole function or even a whole role.
Not on a full-time basis.
Exactly. And the benefit of these people is as well, like, if one person calls in and has one kind of problem, all of a sudden that person starts doing the research that they can apply for a lot of people in that network.
Exactly.
So if, like, for example, for me, after I had that one call with that bank, after realizing that, okay, there are two other companies in my network that can benefit from that. And those people are not necessarily on retainer, but I just called them and went, hey, I know we're friends. You can have this benefit of calling your bank and saying these couple of things. Go and have the conversation.
Excellent. The last question for today. What career advice would you give for graduates?
So effectively, I think this comes down and it's connected to the same thing. I probably should have segued into that a little bit smoother.
Sure.
But effectively, you can be, like, I know that consulting is really tough right now. I walked out of Big Four consulting about a year ago myself, and it was pretty obvious where the market was going, and it was tough. Effectively, like, a lot of people are looking at the exit option from consulting, either as being their own entrepreneur and running a business, or going in-house into banks or larger corporates, while there's a whole market of small, medium-sized enterprises that have relatively small problems operating on relatively smaller stakes, but teaches you all the mechanics of all of those components. How do you prepare an audit for a small or medium-sized enterprise? What kind of information needs to be done there? It teaches you a lot of the mechanics of actually making those decisions. And then that will most likely prepare you a lot more, especially once you have that background of having studied something carefully or having worked with that in that field as a consultant,
right? To
then be able to go and see, this is what it actually looks like in real life when you are the one kind of taking the decisions and you're responsible for, because you build the relationships and you really start caring about these people. They're not just someone that writes you a check. So at the end of the day, you actually feel that responsibility, and that will progress your career, giving you an entirely different set of experiences and knowledge.
Excellent. So if we want to sum up everything that has been told today, how would we coin that sentence? So SMEs and startups definitely need, I would say, awareness of their finances and cash flow situation and try to anticipate, right?
Yes. So I would say finding some kind of help on finance to help to enable you to build those relationships with investors and financiers. Right. And also just, you don't need to go all the way up to the top. You can, a lot of that talent and ability to help on that, if you're flexible with how you're working with these people, you can get that for a lot more of an affordable pouch of money than one might expect.
All right. So we could say that basically maintaining a regular line of communication is essential and not wait for a major problem to appear in order to wonder how to handle the cash flow, and also require the assistance of a competent CFO, a fractional CFO or a part-time CFO. That's what you said.
if that's what's suitable for the business, right? If you don't have that kind of margin and if you're not having that complex of a business, having someone that does that and takes the stress away. I know a lot of people that start sweating immediately as soon as you start talking about like go and talk to your bank. You can probably outsource that and get someone to do that for you, or like working with raising capital and having all these conversations, because those people tend to like it and they have some kind of experience with it before.
Excellent. All right. So that is going to conclude this session on financing, funding, and SMEs and startups, how to best deal with our cash flow in challenging times. Thank you very much. We'll see you again.